I took an hour and a half presentation. I tried to distill it down to a 10-minute one. So let's see what we do here. So I'll share some things that I want to share, but it's everything that I wish my friends, family all knew about all the tax optimization. Sorry, I forgot to introduce the dinner crowd. Hey guys, you want to say hi? All right, all right. So I see people leaving money or retirement savings on the table left and right. So my goal is to throw a bunch of things out there for you guys to think about. Maybe your missed opportunity, maybe not. Maybe you can restructure some things, but we'll see here. You guys, it's all about connecting one another. So that's why I wanted this event to be in person and also remotely for you guys to be able to sync up, as you wish afterwards. And really the Q&A hopefully will be helpful as well. And there's really an opportunity for you guys to get involved if you're interested. You got the contact info on the bottom right. This club management has put together the Beaver plan. Really the goal is to make it a great use of your time, to connect, contribute, share. And at least for me, I found volunteering with the club gives me kind of a taste of what it's like when I was a student, meeting lots of cool people, a lot of different ideas. A lot of people have different ways of doing things that I learned from. I think, oh, wow, that's great, So anyways, I recommend you guys get involved. So some quick introductions. I'm a money manager now. My career has been in finance my whole career. I was a certified tax preparer when I was 14, but I couldn't sign the returns, but I had the H&R Block certification. Anyways, the tax piece has always been interesting because it's kind of hard to beat the market, but it's really easy to be tax optimized sometimes. So it kind of adds a little bit of certainty around all the uncertainty that goes on in the markets. And then Don is coming in. We'll let him introduce himself when he gets started. And Ankur, we'll let him do a proper intro when we turn it over to him. Anyways, I love what he built. I can't wait for you guys to see it, but let's get moving here. So this isn't going to apply to everybody, but hopefully there's a little bit of something for you guys to see like, oh, wow, I didn't know about that. Oh, I never thought about it that way. Maybe I can be more efficient with my savings. These are the key points, and I'll make this deck shareable, and this is recorded, so we'll do the replay on YouTube. And so there'll be some links. I'm going to add some other slides in here. I realized I wanted to add. We'll make it shareable and commentable for you guys. This is the scope of what I hope to cover in 10 minutes. So I'm going to pull out my phone. I'm going to set it a 10-minute timer, and then we're going to turn it over to the next speaker. And here we go. Start. So guys, queue up your questions. I saw the sign-up list, a lot of really interesting people who themselves have a lot of good answers to the questions. Anyways, just go to town, folks. We'll hit some stuff on Q&A. So here we go. Taxes, California. We even got New York beat for those that don't live in the city. Anyways, okay, this is a sense of tax rates. This is kind of the break point. If you're single, 225K with a child, your money in your savings account is taxed at 49.9%. Long-term rates here, they're still quite massive, but they're only going up. Key point here is taxes are high. If only you could do more in your Roth IRA. Sounds simple, but the path is actually kind of interesting. This is you, this is me, and this is, think of your Roth accounts as like the MIT endowment. Tax-free, baby. But you have certain rules, and there's limitations on what can go in, what and whatnot. Here's a quote from Warren Buffett. He sold his Apple. He's been trimming it down. He cited only 21% tax rate that he pays, and he said higher taxes are quite likely. It's guaranteed the taxes are going up, but I'll spare all the math on that. So this slide here is in the rules that a lot of people find surprising, and that is when you contribute to a Roth IRA. Now, your income has to be low enough to contribute. Those contributions you could take out anytime. So Peter Thiel contributed, call it $1,700 in a Roth IRA a few decades ago, put it into owned a company that owned his founder shares. So now his Roth IRA is worth $5 billion or so. MIT's endowment, $25 billion. So his one Roth IRA has been growing tax-free, just like MIT's endowment, and it's 1/5 the size. He turns 59 and a half pretty soon, so he can start spending that money penalty-free. But here's the thing. When you convert money into a Roth IRA, you only have to wait 5 years. And so there's a lot of ways to convert in. And then if you're thinking, well, those retirement accounts, it just seems so far into the future. But for example, Ankur can help you If you're self-employed, move 100 grand over there if you didn't file taxes yet. It's meaningful. And that's called the mega backdoor Roth through being a business owner, et cetera, et cetera. We'll kind of touch on that here. So I don't know about you guys, the years fly by, like a few years goes by pretty fast. And next thing you know, you've got money in your Roth IRA that you can take out. So when you think about like being able to take that maneuver, that's kind of the idea I'm trying to get at here. So 401k versus IRA, there's some considerations as well. Not everybody knows you get a little more flexibility in IRA accounts sometimes. Education expense. You know, let's say you just graduated from MIT and you're thinking, hey, I'm going back to grad school. I can't afford to put money in the retirement account. Well, you know, you're parking it and you're paying 30 to 40% taxes on that money. Not a good move. Here's another consideration. Let's say you just graduated from MIT and according to the admissions, 126K is the starting salary. 126K, and you're thinking, hey, I can't save for retirement right now. I got to pay my student loans. And then a couple of years ago, the Supreme Court knocked it down, but Biden was going to give you relief if you made less than 125K. That one didn't pass, but there's new stuff coming. So the point is, if this person not contributing to their 401k and not lowering their income, they missed out on qualifying for what could have been 10 to 20,000 of student loan forgiveness. So there's other things that apply for parents. But let's back up a sec. And this is something that the reason I called it pre-tax versus after tax, because everybody, that's the one question you have to answer in your 401k. That's the one thing that the company is not going to help you with. But there's considerations that matter. So when you look at your W-2 and you see like your wages and your Social Security wages, those are what qualify you to be able to use retirement accounts. In this case, this person has Social Security wages of 100K. That means they paid into Medicare. The fact that then this person moved 5,000 into a pre-tax contribution, so their AGI, their adjusted gross income, is now 95,000. So the student who would have done that, you know, 125K salary would have qualified for all of the loan forgiveness. Going forward, the clean vehicle credit. These are hard cutoffs. These are cutoffs that if you plan ahead, you cannot shoot yourself in the foot. So the big goal here is don't shoot yourself in the foot. You might have gotten excited. The salesperson might have told you about this great $7,500 tax credit, or in California, potentially 15,000 was kind of the peak where when you added it all together with some free charging value. But you had to know what you were doing and you had to keep your income within that range. All right, moving along. So if you are self-employed, there's something called the QBI deduction. Don't have time to go deep into it, but there is a phase where, here's an example, you're single, you get into a 70% tax rate. So if you're sitting there thinking, hey man, I'm not going to do pre-tax because taxes are going up, you know, you really need the math to figure it out. And again, this is a perfect example where something like Ankur and his stuff that he can do and other solo 401k accounts can do to reduce your income. It's the kind of stuff you can do after the year's over. How much? So when you have a side gig, I mean, some people, you know, friends started at Facebook. They were independent contractors for a while. They eventually, through word of mouth, figure out all these things. The same goes for like the after-tax contribution that a lot of companies have. The after-tax contribution lets you get closer to these limits, which gets us back to moving money that's from the checking account to your Roth IRA in the end, or to a Roth 401k. But if it's in the Roth IRA, you can actually grab it in 5 years and spend it. This is a chart that I had for a presentation before the April 15th due date. But the fact of the matter is, if you haven't filed taxes yet and you have side gig income, independent contractor, you qualify for nearly all of the big contributions I just showed you. So that's something you want to look into. And then this slide here is jumping into, you got company money in the 401k at the company. They don't tell you that you can actually often, even though you rolled money in from a previous job, many plans will let you roll that out. So it's not stuck there. Now, the money you put in, salary deferrals, that's stuck until you leave. And there's some different rules on matching. These rules come into play when you think about the different buckets that a solo 401k can do. Or when you think about like, hey, wow, Robinhood will give me 3% for rolling money into their IRA. There you go. There's an option for you there. So anyways, you have more choice with your accounts than you will be told at the employee webinar, because, and I do these because it's too complicated. I want to show my calculator. I have been cranking away on with the hope that people will get benefit from it. 100,000 of sole proprietor income, and this is the question of, should I do SEP IRA or should I do one of these complicated solo 401ks? So this is for someone I helped last year. So 100,000 of net profit. This is the income here that could potentially be used into a 401k plan. So when you look at that person, they're paying 14,000 into Medicare. So 100,000 income, 14,000 Medicare. So their tax piece, like from a pre-tax perspective, is only 8 grand. So it's a small part of your bill. You have to make 200,000 before your regular taxes exceed your Medicare and Social Security contribution. It's really interesting. But you can see those numbers here at tax impacts. You can kind of see where the brackets are and kind of what's left if you want to, top some things up. So anyways, that's just kind of a rapid fire thing to get the Q&A started. And with that, Ankur, I'm going to turn it over to you to take it from here. And when you're done, I'll do one last comment about recruitment for the club to see if we can get more events like this. I think the next one queued up is cocktails and cap tables. So stay tuned. All right, over to you, Ankur.
Thank you, Jason. So I'll give you all a quick background and I'll show you a little demo of what we're building. But just to, I don't know, kind of help me get a sense of the room, I'd love if people typed into chat and kind of talked about what your employment situation is. Do you have a business? Do you have a W-2 job? I just find it helpful to kind of understand who we're talking to. So maybe Jason, you can ask people at dinner while people kind of type into chat.
So we will have the chance to do breakout. Ankur will be gone, but it'll give you guys a chance to join into groups based on your interests and compare notes. You're not going to find a company more interesting than Ankur's, but if you do, I want to hear about it.
Cool.
And back to you, Ankur.
Cool. All right. W2 LLC, S Corp owners. So yeah, so my context, I'm an immigrant. I did not grow up in America. I moved here to go to college. I went to school at Berkeley, California. I've always been an entrepreneur. I really didn't care much about personal finance until I sold my last company. It was a company called Teachable. We sold it in 2020. I was able to hire expensive lawyers and accountants, and that's when I realized the US tax code is kind of wild. It's really like who you know and how you set things up that determine how much you pay in taxes. And that kind of radicalized me. It made me realize that can we build a business that sort of, makes people helps people make better decisions? Because I think I'm a pretty smart person. I knew nothing about the tax code until 2 years ago. And that's sort of the motivation behind what we're building at Carry. As Michael Thomas is saying, US tax code is written by rich people for the benefit of rich people. That's a very common thought, and it's mostly correct. The one caveat I will add is it's not as simple as the tax code being written for all rich people equally. I think the tax code of a country tells you a lot about what the country prioritizes. And in America, and Jason, let me know if you disagree, the tax code is written largely for certain classes of people. Business owners are amongst the most tax advantaged people in the US tax code. And as someone that immigrated to America, that actually makes me feel good that the country prioritizes entrepreneurship, starting a business. So, like, my one blanket piece of advice to most people that are W-2 is if you ever did start a business or moved your income into business owner income, it gives you so many more levers you can play with that are just much, much harder as a W-2 employee. But other than that, people look at the complexity of the tax code and we're adding 150,000 words a year. But what I've realized is this complexity, even though it's frightening, very often contains things that can help us. It just takes professionals to kind of demystify that. So with that sort of spiel, let me show you a little of what we've built at Carry. It's just easier to kind of explain, but I'll share my screen. So primarily what we are today is we're a platform for business owners. As Jason mentioned, about 2 years ago, I learned about this account, a solo 401k. And it's such a remarkably powerful account since it lets you put in up to $70,000 a year in this account. And you can take the entire thing as a tax deduction or do something called a mega backdoor Roth and put all of it in after-tax money. But it's also just the most flexible type of account because it allows you to invest assets however you like. Like you could go crazy and invest it in a real estate deal, invest it in startups. What our platform has done is we've built like really simple tools where you could, for instance, have a robo advisor where we pick the portfolio for you, or you could kind of trade individual stocks and securities. You can keep cash in it. And we've just built, really, really powerful tools to do all of this super, super easily. As Jason said, there is complexity. So what we've tried to do is make it really simple for people to understand and like help guide them to good decisions. So, if someone comes to this screen, they can decide, do I want to save more in taxes today, or do I want to do Roth contribution and save more in taxes later? No matter what, we'll be able to sort of guide them through the best flow. I'm not going to get too technical now. I'll save some time for Q&A, but like you can do things like backdoor Roths, mega backdoor Roths, all of that stuff that, may be relevant, especially if you're a high earner. The other thing I wanted to highlight is, most people have an IRA. What they don't realize is you can use your IRA to invest in alternative assets as well. Again, the Peter Thiel Roth IRA was famous, how Peter Thiel was able to compound and grow that to $5 billion. But I bet a lot of people in this call probably have access to really cool and interesting investment opportunities. And there's nothing stopping you in most cases from putting it inside an IRA. Like here inside my Roth IRA on Carry, I can invest in alternative assets like, real estate, private companies, all of that. I can even buy crypto natively through my IRA on my Carry platform. And we've just built all of this in one single place where I have all of my retirement accounts here. We'll soon add other tax advantage accounts like HSAs and, 529s, and I can talk about all that stuff for hours. So find me in the Q&A for that. But we built one platform to do all of that. I'll give you another final example before jumping to Q&A. How many people here have heard of a backdoor Roth IRA, but honestly have no idea how it actually works? Because most people, if you earn over $160,000 single, I don't remember the number married, I think 250K or so, you can't contribute to a Roth IRA, but there is a very, very simple way to actually set that up so everyone can do a backdoor Roth IRA every single year. All right, Maya, Ashley, everyone's like, okay, cool. So typically, doing a backdoor Roth IRA, it's only $7,000 a year, but everyone here should do it every single time. So the way you do it is you start by moving all other traditional IRA assets into either your solo 401k or your corporate 401k plan. So on Carry, it would be you move to your solo 401k, transfer to Carry, move all other IRA assets in here. This gives you a clean working slate. It avoids like weird tax things coming up later. Once you do that, go to your traditional IRA, deposit $7,000. I'm not going to actually do it. Once you do that, convert to a Roth IRA, and you're done. And you can do this every single year as long as you make sure you move all your pre-tax IRA dollars before. These are the kinds of tools we're trying to make really simple for people. But it's the sort of thing that I have so many smart friends that earn too much money to do a Roth IRA directly. They want to do a backdoor Roth. No one's ever told them how to do it. I see Evan asking about a mega backdoor Roth. I'll talk about that as well. So the way a mega backdoor Roth works is it's based on a 401k, so you can actually put in up to $69,000 a year. And the way it works is you make a deposit to an optional after-tax account. Let me see, new contribution. Actually, yeah, I actually have an after-tax account. You make a deposit to an optional after-tax account if your plan supports it, and then you, on Carry, would convert it to a mega backdoor Roth. The challenge is a mega backdoor Roth requires cooperation from your 401k provider. So if you're self-employed, great, you can use Carry and set it up. But otherwise, it depends on your corporate employer. I can't remember who, but I think like Uber or Facebook, one of them offers it, the other one doesn't. Some of big tech does, some of it doesn't. So it really depends on your employer. But if your employer allows it, you can do up to $69,000 a year in that. That's a great question. Eugenia, who says, is there a tax implementation for backdoor Roth? If you do it correctly, which means move all pre-tax IRA dollars to a 401k and then make a new contribution after tax, it should be fully tax-free. You're not taking a tax deduction, but you have to pay no additional taxes. You're doing it the same as someone who would be making a new Roth contribution. With that, other stuff we haven't carried, it's not a lot, but education is such a big part of it. We also have a big sort of education library. We have courses on equity compensation, personal finance for startup founders, specifically taxes for business owners, fun courses like credit card points, angel investing, tax planning around an exit. It's all sort of bundled into the platform. We recently rolled out monthly pricing as well. So if someone wants to check us out, it's literally 29 bucks a month. You can cancel whenever. But yeah, been building this company for 18 months and super excited about it. So happy to take any questions. Evan says, does Vanguard Solo 401k support Mega Backdoor? So none of the conventional 401k providers do Mega Backdoor. We're the only one, and we're not a conventional provider that does. In fact, Vanguard sold their entire Solo 401k business, so they're no longer in it. David says, does Fidelity? Fidelity does not. Fidelity does not even support Roth contributions, and Fidelity also requires you to submit a paper check. So it's not the best. Amongst the bigger brokerages, I would say Schwab probably has the most supportive setup for solo 401ks, but even they don't allow Mega Backdoor. Jason has a question. Can we use your plan, but also open accounts at Schwab? Yes, you can. You can take our plan docs and open accounts to other brokerages, but everything works smoother if you use our inbuilt brokerage. You don't have to, but it's just better integrated.
And I'll
Martin,
just add in, that's
yep.
the old way, or it's basically how everybody else does it before Ankur's company is you get a plan, you buy a plan from a company, and then you take that plan and you go to Schwab or Vanguard,
Yep.
and they will open the accounts for you. And it's quite a burdensome process, but it is the way people have done it historically, and it gets into the alternative investing side of things as well.
Correct. So right now we have our self-directed IRA. In the next 3 months, we'll have a beautiful alternative investing flow built into the Solo 401k, where it basically creates a bank account attached to Solo 401k. And you can initiate investments in real estate, all these alternative assets. And Paul has a very good question that's very relevant. Paul says, how do you help customers avoid messing up record keeping and running afoul of IRS? So the danger if you take our plan and invest elsewhere is we can't help with plan compliance. We can't actually do any of that. But if all your investments are on our platform, we will help you generate all the forms. And the forms are, if you do a conversion, we have to generate something called a 1099-R. If you have over 250,000 in assets, we have to generate something called a Form 5500 EZ. We can only do that with assets we can see. So if you go off platform, you become responsible for plan compliance. If you're on platform, we'll help you with all of that. So that's another reason where it may make sense to stay with us. But at the end of the day, you're the plan administrator, you control it. So, what we have is a suggestion and you can do what you want. Question from Martin, are you going to have HSA support? Yes, we are. TBD on exactly when. We're working with our custodian. One interesting thing about HSAs for anyone that has an HSA is if you can afford it, I highly recommend not using your HSA for any medical expenses up front, because one of the most powerful features of an HSA account is if you keep the receipt, you can reimburse yourself whenever you want. 1 year later, 5 years later, 20 years later. So when we build our HSA accounts, the way we're going to build it is we're going to build receipt tracking embedded. So our expectation is people will pay medical expenses out of pocket, let their HSA account grow and compound, and then reimburse themselves years later. But yes, we do want HSA support. Paul says, do you offer any way for customers to track non-retirement assets? So we do have a brokerage built into our system, but I'll be the first to tell you it's not our focus. There's enough companies out there competing for, everything in the taxable world. That's not our focus. Our goal is let's get very good at all the tax advantaged accounts and help people over there, and then figure out how to optimize taxable investments. With that said, I know a lot about the field. So if you have any questions for me, I'm happy to help out. But within Carry, we're focused on tax advantage accounts. Eventually, our goal, we're not there yet, is, yeah, we would love to help people even figure out what types of accounts to open, think about if there's anything we can do on the tax filing side of things. For instance, we file taxes for a handful of customers. It's a small CPA shop we have inside the company. It's not a big focus at all, but it helps keep us on the cutting edge and figure out what to build next.
Sort of broadening the scope, alternative assets is something that you open the door to when you're able to move more money into your retirement accounts. We can kind of hit on some of that more in the Q&A. You know, the ability to do personal loans to someone else, to, you know, to a non-sibling,
Yep.
non-parent. And the fact that, so as you answer my question, so you could start with Ankur's plan and then add on kind of as a sidecar the ability to do some of the more complicated stuff. One thing I like that a lot of people don't understand is using leverage in an alternative. This 401k has an exemption where you could do rental real estate and have leverage. It's a beautiful thing, but you know, it's the kind of thing where you kind of want to know people who've done it or have. That was my hope, is that people can kind of network and be able to
Yep.
meet with other people doing similar things and help solve those problems.
Yeah. No, I think these accounts are just like, that's the other thing I didn't fully cover, but let's imagine for whatever reason you need to access, like you need to take a loan for any reason. You can borrow up to 50 grand from your own solo 401k, pay yourself back the interest. So the interest doesn't go to anyone else, it goes right back to your plan. So you can always tap into it as a source of liquidity too. I actually had a friend who told me she wanted to access her IRA. She got laid off, and I told her now that she's freelancing, she can set up a solo 401k, roll her IRA into the solo 401k, and then borrow up to $50,000 against her retirement funds. And whenever she pays it back, she gets the interest. There's no third party. So it's very powerful. We can open it up to other questions, even if it's sort of like broader questions versus just sort of carry or solo 401k related. Cool. Eugenia has a question. What's the difference between a SEP IRA versus a solo 401k? So a solo 401k in almost every situation is, so let me talk about what they have in common first. So both the SEP IRA and solo 401k are retirement plans for self-employed people. Historically, SEP IRAs are what people used because they were easier to set up and people, they just had less friction, so people use them more. But a solo 401k is a more powerful account for a few different reasons. One, you can actually end up contributing much more to a solo 401k versus a SEP IRA because you can make contributions as an employee and as an employer. So for someone making about $100,000 with a SEP IRA, with a solo 401k, you can get in almost twice as much money than a SEP IRA. Few other smaller edge cases. Solo 401ks make it easier to make Roth contributions. SEP IRAs technically allow Roth contributions based on new legislation, but most SEP providers don't actually let you do that. Meanwhile, a solo 401k lets you not just do a Roth contribution, you can do a mega backdoor Roth and put the entire thing in Roth. You can also borrow money from your solo 401k, which you can't do from your SEP IRA. A SEP IRA also makes it harder to do a backdoor IRA that we just showed you because you'll end up having more dollars in a pre-tax IRA. If you're over the age of 50, you can put in more dollars total, 76,500 into a solo versus a SEP IRA. Lots and lots of benefits. I can keep going on. The only time you would want to do a SEP versus a solo is if you have employees in your company that you want to also make the same amount of matches for, in which case you can use a SEP, but a solo, you need to have no other full-time employees. Louise says, does it matter what kind of company you have in order to set up a solo 401k? It does not matter what type of company you have, but your contribution limits are based on your type of company. For instance, let me go show you my calculator. I am an LLC, so my contribution limit is based on, let me see, I have 110,000, 21,000. My contribution limit is based on my net income as a business, as a LLC or self or sole proprietor. If you are an S corp or a C corp, your contribution limits are based on your W-2 salary. So your limits change a lot based on whether you're an LLC or an S corp, but you can have a solo 401k regardless. There's a whole separate rant I can get into, which is if you are an S corp, picking the right W-2 salary becomes very, very important because you want to find a salary that both lowers your self-employment tax burden while ensuring you're getting the maximum QBI deduction and also, being able to make the contributions you want to your retirement plans.
And that QBI deduction is important to understand when you're looking at the employer Roth, because the math works against you on that. Won't go into it here, but that's potentially a place where the solo 401k has an advantage, and it's worth looking into before just jumping on one choice over another. Ashley asks, is the backdoor Roth advantageous if you expect to be in a lower tax bracket in retirement? And the answer is, it really depends. If the alternative is you would have more money sitting there getting taxed at 40 to 50%, then the fact that you're going to have a lower tax rate in retirement gets dwarfed by the amount of taxes you're going to pay if it means the money was otherwise sitting in your taxable account. So it kind of gets back to the bigger picture of trying to get as much of your money protected for the long haul.
Yep. I should also add, for a lot of people, you won't get a tax reduction for a traditional IRA. If you have a retirement plan at work, like a 401k, and you make over a pretty low number, like 70,000, you actually don't get a tax deduction for a traditional IRA. I want to handle this question from Lucy, or this comment where Lucy says SEP also has a contribution deadline of 4/15, while solo 401k, it's 12/31. Lucy, that's actually no longer true. There was this bill put out in the last week of 2022, the Secure Act 2.0, and that actually moved the deadline for solo 401k plan setup and contribution.
If you're a single member LLC, gig worker, you've got till October 15th. There's only one thing you missed out on, but you can still do the very large other options.
Yep. Cool. Paul says, how do you handle all these individual situations during your customer onboarding process? So what we've done is we've built self-serve tools, and we're not ultimately giving tax advice. So people have to go through the funnel and kind of, figure it out themselves. Obviously we have support and so forth, but we're not getting on calls with people or anything. With that said, on our more expensive plan, which is $49 a month or $4.99, we pair people with a financial planner who through chat can help them with stuff like this.
So I wanted to add one more of my key points that I had on my slides is regarding spousal IRA. So it's all about earned income, but as long as one of the spouse has enough earned income, you have the ability to do the spousal IRA as well. So married couple, they're both over 50 years old. If it were before April 15th, they could have done 77,000 plus 7,500 for each spouse for this year and last year. Thus, moving, nearly $30,000 from their checking account to a Roth IRA. Do you guys handle, you can handle spousals too, right, Arthur?
Yeah, right now, actually, yeah, we can handle spousal IRAs. We can't handle custodial IRAs. We can't handle IRAs for children.
Got it. Whole nother subject.
Yep. Other quick stuff I'll just cover real quick that people should just know about that blew my mind. One, if you are a startup founder, make sure you know the words QSBS, Qualified Small Business Stock. That is the single most generous tax break in America today. It also applies to C Corp employees and investors. It's something everyone should know and be aware of. Other than that, tax advantage accounts are your friends, whether it's HSAs, 529s, retirement plans. The government has created these incentives for us. We should be taking advantage of them. Aside from that, final note that I always want to tell people is there's a lot of scary tax stuff. I still think it's always important to remember, don't let the tax tail wag the dog. Taxes are a part of life, and I always tell people, focus on living the best life you can and then figure out your tax strategy. Don't put tax strategy above everything, right? You'd rather have a business that's doing really well and paying more in taxes than a smaller business that does not pay anything in taxes.
Well, why don't we let Ankur go? But before we do that, I'll let you do some final words, Ankur.
Great to meet everyone. Again, you can always check us out at Carey.com. If you have any questions, you can email us at hello@Carey.com. You can find me on social. I mean, again, I've become kind of a tax nerd, so happy to answer any questions. I'm active on Twitter as well. But yeah, it was great to meet everyone. I hope you all have a good time. And Yeah, thanks for having me, Jason.
Thanks for being here. And I'll do, I got one more slide to show with everybody, and then we will wrap. And it is, where we'd like to go with the FinTrack. So, well, first of all, this event was sponsored by a generous donation by SungSim. So thank you, SungSim. Didn't know I was going to say that. I kind of put it on the spot. So the idea being to get you guys sharing your playbook. Come on out here. Let people, beat it up. Let's do an event. I'd love to have enough interest to have like a Saturday morning coffee thing where we have a bunch of panels, and we can do that deep dive on the Mega Backdoor Roth, or talk about how Andy and I invested in leveraged real estate and solo 401k and how complicated it was, but how great it's going to be with the tax-free growth. So send us an email at fin-track at mitcnc.org. And there you have it. Thanks a lot. We're going to turn this over to networking online. We'll split it up into groups. Why don't we just kind of see where it goes from there? So thanks, everybody. And I will share my deck and this contact information with you folks as well. And so please send your comments.